This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin. Little B for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Checking in on Bitcoin right now, the CoinDesk Bitcoin price XBX index is currently at $16,954. Bitcoin is down just about 0.6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Right, here's our CoinDesk Bitcoin News Roundup. Commodity Futures Trading Commission Chair Rostin Behnam wants lawmakers to act quickly following the collapse of FTX. During a Senate hearing today, the agency chief urged congressional action to install some regulatory framework for digital assets. Have a listen.
We need registration of exchanges. We need surveillance of market activity. We need direct relationship with custodians who are holding customer money so that we can prohibit and prevent money moving around.
Behnam also saying his agency could not have prevented FTX's collapse as it wasn't an entity regulated by the CFTC. This is the first of several hearings that will examine FTX's collapse. Meanwhile, Compass Mining is gearing up to offer a Bitcoin mining protection plan. The rollout will allow customers to safeguard their Bitcoin mining machines. Insurance options for miners are very limited due to the fact that traditional insurers have had a hard time coming up with plans for the nascent industry. Finally, Casa, a popular Bitcoin self-custody firm, is adding Ethereum support to its platform in what some may consider an unlikely move. Casa saying an overhauled version of their app will launch in January. And joining us now to discuss is Casa CEO Nick Neuman and co-founder and CTO Jameson Lopp. Welcome, Nick and Jameson, to the show. So adding Ethereum support comes as a surprise. Good to see you. To some, especially as some people consider Casa a purely Bitcoin company. And Jameson, you are an outspoken cypherpunk and well-known Bitcoin advocate. So why are you opening up to Ethereum? You could start with Jameson.
Yeah, go ahead, Jameson.
So, this is a response to market demand. Obviously, we've been in operation since 2018. We have plenty of customers and prospective customers, and we're constantly listening to them and trying to understand their needs. And, our whole mantra from the beginning has been that we are in the business of helping people empower themselves, helping make self-sovereignty more attainable for the average person. Bitcoin being the king of cryptocurrency was the obvious first step there. There's a great amount of value. People have a lot to secure and a lot to potentially lose if they're not confident in their self-custody. So that was the first step. And we regularly are getting requests for help with other assets, other things. We're, in the long-term business of helping people secure their private keys, and we believe that private keys are going to be used in a multitude of different ways over the long term. So we're not going to be, limiting what people can do with them.
Mm-hmm. And Casa's original CEO and co-founder Jeremy Welch floated the idea of onboarding multiple cryptocurrencies. So, Nick, are you considering other cryptocurrencies as well?
I mean, as of today, we're taking a big step with Ethereum, and I was we were all part of that original decision to focus on Bitcoin. And we made that decision as a company at the time, given the resources that we had, and given that we were a security company that really was trying to nail a very simple, secure experience with our product. And so as we think about what we're going to do going forward here, it really comes down to the customer demand, what we're hearing from our customers, and where the market opportunity is, and how that drives towards that ultimate vision, which Jameson touched on there, which is that private keys will secure everything important to us in our lives. And so that's something that we will evaluate as we go. But as of right now, we are really focused on building the best experience for the Bitcoin and Ethereum ecosystems.
Yeah. Custodying your own cryptocurrency has certainly been a hot topic these days, especially after the recent failure of FTX. And so I wonder how that has impacted Casa.
Yeah, I mean, we've definitely seen significantly increased interest over the last month since FTX had their implosion. Basically, it was a very clear, probably the most clear example we've had since Mt. Gox of the risks of keeping your Bitcoin or your crypto in general with a custodian. And so people are learning the hard lesson, unfortunately, that if you don't hold your own keys, they're not your coins. And so we really view this as part of our overall mission, I would say, which is to help people have control, true ownership over these assets that represent their savings and their investments.
Yeah, how could a Casa have prevented something like what people are finding now, which is that they're losing their life savings because they had it on FTX?
I mean, we saw it with our customers.
Simply,
yeah.
Yeah.
Go ahead, Jameson.
When you have the keys yourself, then those funds are not going to move without your consent. So what we're really talking about, usually when we talk about sovereignty, we're really talking about, can things happen to you without your consent? And this is why private key management and self-custody is a fundamental act that is important to the integrity of the entire ecosystem, because it is what gives people the power to decide, whether or not something can happen to their assets at the moment. We believe that, in the future, it's going to be about a lot more than just cryptocurrency, crypto assets, but rather many different aspects of your life that you will be empowered to decide and have consent over.
So I guess the problem that some people have with self-custodying is the amount of responsibility. And frankly, some people want to give that responsibility to a trusted intermediary. So does Casa do anything that simplifies self-custody in a way that people would be more comfortable with holding a bank in their pocket? Maybe Jameson, you can take a stab at that.
Yeah, so Casa has had several different aspects to it that I believe make it easier for people to get into self-custody. Now, there is, of course, the software aspect. We believe that providing a much simpler interface makes it easier for people to navigate some of these complexities. And actually having too many options results in foot guns and the ability for people to make more mistakes. But another aspect of this that you don't find as often in self-custody is, having dedicated support, like someone you can actually get on the phone with to walk you through the different challenges, complexities, decisions, understanding the trade-offs of what you're doing so that you can be confident that you're making the right decisions.
You want to add to that, Nick?
Yeah, I think Jameson actually explained that quite well. The only thing that I would add is that the actual tech that we've built on protects against some of the mistakes that people are worried about when they're holding their own keys. So one of the biggest things that we hear around anxiety of holding your own keys is, what happens if I make a mistake and suddenly I've lost all my money? I would much rather give my keys to somebody else who I can trust has, more expertise in this than me. Unfortunately, we find out pretty frequently that that's not the case. They don't have necessarily more expertise than you, and they don't care as much about protecting your money as you do. But what we've built on is a technology called multi-sig. This allows you to use multiple keys to protect one pool of money. And so if you lose a key, you don't actually lose all your money. Suddenly you are allowed to be a human and still have real control over your funds. It adds resiliency, it adds security to a self-custody setup, and that gives people a lot of peace of mind.
And are you the one who is safeguarding your multi-sig, your private key, or is that somehow facilitated or made easier by Casa? Somewhat like how signing into email, where they ask you, hey, what's your phone number? We'll text you, or what's your birthday, or something like that.
Yeah, that's the software that we've built makes it significantly easier to use multisig. You could use that technology through a different piece of software. It's been around since before Casa was around or was created. But the difference is that we've actually put a ton of work, like Jameson was saying earlier, into making the experience simple and approachable for people. And so suddenly this more resilient, more secure tech, which wasn't available to the mainstream population before, is now available because it's so much easier to use through our software.
And another aspect of this is actually that Casa is holding one of the keys in the multisig, and so that does not give us control over your funds. We can't prevent you from using your funds however you want, but we can help you in certain emergency situations. And this is another aspect of the resiliency and redundancy that's built into the system, is that you're not doing this alone. You have essentially an expert that is supporting you, but does not have the power to prevent you from using your money as you wish.
Just finally, before we wrap up, Sam Bankman-Fried gave an interview to the New York Times and their Deal Book Summit the other day. I wonder if you had a chance to listen to what he said and had any reaction to some of his comments.
I caught like the tail end of it. We made our announcement around Ethereum support same day, so we were super busy, but not a ton of reaction beyond what's already been said within the broader community. And I think the whole situation just generally highlights the importance of holding your own keys for people in our community. And I hope
Jameson,
that this is really a turning point.
I have no reason to believe anything that comes out of his mouth, so I'm not going to spend any of my time listening to him.
Fair enough. All right. Thank you, Nick and Jameson, for joining us. That was Casa CEO Nick Neuman and co-founder and CTO Jameson Lopp. Coming up, we've got a BTC Markets update with StockCharts.com senior technical analyst Julius de Kempenaer.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
It's time for our chart of the day. This data from Goldman Sachs Global Investment Research showing that U.S. financial conditions are easing notably since the release of the October inflation report on November 10th. That's putting more pressure on Federal Reserve Chair Jerome Powell to temper the expectations of investors who sent the prices of risky assets like cryptocurrencies higher on Wednesday in anticipation of lower rate hikes, as they played down Powell's comments that fighting inflation is still the Fed's priority. The more the Federal Reserve pivots away from aggressive liquidity tightening, the greater the loosening of financial conditions and the bigger the risk of the central bank missing its inflation target. Therefore, the Fed may push back against easing financial conditions, more so as investors focus on Chair Powell easing off rate hikes while ignoring his core message of stubbornly higher core inflation. All right, joining us now to discuss BTC and the crypto markets is StockCharts.com senior technical analyst Julius to Kempenaer. Welcome, Julius, to the show. So we did see a bit of a bump in Bitcoin the other day. Where do you see it short term headed into the end of the year?
Ooh, for the short term, I think there's actually a little bit of upside. We're now, the major move that we've seen over the last couple of weeks, months, was the break below 18,500. That was a serious break of that long trend range that we saw. And we've now hovered around 15.5, and you see it now bouncing off that newly formed support level. Right now, we're kind of pushing against 17,000, but the major overhead resistance, and the one that is going to probably keep it under wraps, is that 18,000 level. So in the near term, we may see a little bit more upside, but in my view, it's very, very limited towards that 18,000 level. And if you're approaching Bitcoin from the long side, I'd be very, very careful, because the upside potential is about, let's say, $1,000, while the downside risk is, I think, a multitude of that. That's pretty big, actually.
Oh, yikes. How low are you seeing the bottom? And we do have a chart from StockCharts.com showing the past 6 months. What kind of trends are you seeing there?
Yeah, so this is what we just discussed. Like that level where we're now pushing against, that's that 17,000. And then the dotted line a little bit higher is that 18,000. You can see that was touched a number of times over the last 6 months. So the more a level has been touched, the more important it's become. And the rule in technical analysis, if you wish, is that a support level, once broken, comes back as resistance. And that is what we're very likely going to see when we can push beyond 17,000. That 18,000 will be a serious resistance level. On the downside, by the way, this is an excellent, now that I'm looking at it on the screen, is an excellent example of don't confuse the bottom of the chart with support, because that 15.5, that little red line that's connecting the last two lows, that is definitely not the lowest part of the Bitcoin chart. If we go below that, I think that the next serious support level is only found around 12.5, 13,000. So if you bring that into comparison with the upside potential of $1,000, your downside is pretty big.
Oh, wow. We also have a look at the past 4 years of Bitcoin. What kind of trends are you seeing there that might impact the future?
Yeah, this is the longer term trend, and if you look at the trend that has been developing since let's say the end of 2021, then you see a very regular series of lower highs and lower lows. That is the characteristic of a downtrend. And this is a weekly chart, so this is a long term trend. That's not going to be reversed like in 2 days. So as long as this rhythm of lower highs and lower lows continues, we got to assume that this market is in a downtrend, and we just broke below that 18,000 level, which we already saw on that daily chart. That was the previous low. So the next lower low, which may have been 15,500, but it could come lower, is again a lower low in that series. So the new lower high is going to be a new lower high in that series, and basically confirming that downtrend. And as you can see, that 12.5, 13,000, that goes all the way back to the highs of 2019 and 2020. That's where you see the first serious level where the market has peaked and tested a couple of years ago, and that is very likely going to come back as a new support level. But again, that's a couple of $1,000 lower than where we are today.
All right. Julius the Bear out with the claws. Thanks so much for joining us. That was StockCharts.com Senior Technical Analyst Julius de Kempenaer. All right, that's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again tomorrow at 3 o'clock in New York. Also, join us tomorrow morning at 9 a.m. Eastern for First Mover. You're watching CoinDesk TV.